So the second half of this is going to be a fireside chat with ARK Invest. Dave Puel, close enough, is going to be moderating the event. Lorenzo and Joseph are going to be up here as well. They have some topics that they've prepared, but at the end, I'd like to maybe take a couple of questions, not go too crazy with that from the audience, but hold your questions to the end, and we'll just kind of let the conversation go where it goes. All right, come on up, guys.
Morning, everyone. I'm David Puel, research trading analyst and associate portfolio manager at ARK Invest. And with me today, I have two of my colleagues, Lorenzo Valente, director of digital assets at ARK Invest, and Joseph Soya, research analyst in the next generation internet team, specialist in AI, I would say. Do you want to give quick intros, Lorenzo and Joseph?
Yeah, just very quick. I'm Lorenzo. Happy to be here. I'm the director of digital assets at ARK Invest. Yeah, been in the space for 7-8 years now, and started at ARK a bit more than a year ago.
My name is Joseph Soya. I've been with ARK for about 2.5 years now. I work with the team on topics in enterprise software, cloud compute, and AI. Prior to my time at ARK, I studied mathematics and at Cambridge before leaving academia to come here.
Perfect. So let's kick some questions off. Joseph, I'm going to focus on you, but Lorenzo, feel free to jump in if you want. I'm noticing 3 big disruptions in the AI world today. I mean, many, but let's focus on 3 for now. First one would be custom software. Let's say you have with vibe coding and things like that emerging and being widespread today. What do you think are the magnitude and implications of customized software versus the ready-made infrastructure without AI, let's say?
Yeah, it's a good place to start. So there's sort of 3 main layers to the software stack, right? There's the top layer, the software as a service layer. Then you've got the platforms on which that software is developed, built, maintained, protected. And then at the very bottom of the stack, you've got the infrastructure that everything runs on, your AWS, Azure, GCP, those sorts of companies. One of the interesting things we've seen with AI is it's reducing businesses' reliance on the top layer of that stack, that software as a service layer, by enabling them to create their own customized software tools that are better catered to their specific needs. Especially with sort of smaller enterprises that can be a little bit more nimble with this. Maybe a fun example, and you kind of mentioned this as well. Internally at ARK, we had a hackathon about a week ago where we just used Replic's coding agent to solve a lot of the problems around the company and software that we wanted to develop. And everybody in the organization, regardless of coding experience, could start creating, I won't say production ready, but close to production ready tools that we could actually implement. And I think we're starting to see this happen at a broader scale as well. And one of the implications of it is, while we still expect software as a service to grow quite well as a result of continued transition towards cloud and continued AI demand, we think that that platform layer that these applications are built on and the infrastructure layer beneath that are going to take the lion's share of the acceleration over the next 5 years. And then maybe just sort of one larger scale example of this as well. If you look at Palantir's products. So Palantir, ServiceNow, those would sort of be some of the companies that we're putting in that platform layer. Palantir's recently released a product called Warp Speed, where they specifically looked at companies like SpaceX, who have the engineering resources to build their own custom software, and sort of said, how can we bring this and democratize it to companies that maybe don't have the engineering tools that SpaceX has to sort of customize their own manufacturing software. Right. So we're seeing companies at that platform layer already try to leverage AI to start to disrupt some of those out of the box, one size fits none software products.
Gotcha. Moving into the second big disruption compared to the last, people count several industrial revolutions from 1 to 3. Whatever the number may be, all of them were characteristically manufacturing jobs, right? So in this fourth, let's say, industrial revolution, we're seeing a shift into knowledge work and, white collar jobs, whatever you want to call it. What are your thoughts on that? How much is that labor force going to be disrupted in the next 5 to 10 years?
Yeah, so this has been a question on a lot of people's minds lately, especially after some comments were made a couple weeks ago by Dario Amodei, who's the CEO of Anthropic, one of the leading model providers. He said that he expects roughly 50% of white-collar jobs to be disrupted by AI in the coming years. And he even forecasted the total impact of that being 10 to 20% unemployment as a result. I can understand where he's coming from as a CEO of one of these leading large language model companies. Where he's sitting, he's seeing a lot of disruption of sort of the routine tasks that we do every day. And he's looking at the models within his own company and competitors like OpenAI getting progressively more intelligent and capable of doing more and more. But we think there are sort of two key components that are missing to his analysis. The first is that the nature of how we work is going to evolve. Entry-level jobs may not necessarily gravitate towards things like, data entry or manual tasks in front of a keyboard, but will rather focus on actually being in that agent orchestration layer themselves, right? Where entry-level positions will be agent orchestrators. And I think the second big thing that's missing is that these technological shifts tend to increase employment in these fields rather than decrease them. Andrew Ng, who's sort of one of the titans of modern AI, professor at Stanford, I think he gave a really good analogy looking back for this topic, right? Which is when we shifted from punch cards to coding with keyboards and terminals, it didn't decrease the total demand for software engineers by making their jobs easier. It actually created an explosion of demand for software engineers. And I think we're going to see a similar shift in the next few years when it comes to AI-generated software, where it'll actually create more demand for these roles over time and increase demand for that kind of knowledge.
Gotcha. So, third big disruption. People keep talking about agentic AI. Can you tell us a little bit about that, and perhaps how, putting the mark on Lorenzo a little bit, how that relates to crypto potentially, if that's still a very mature type of technology, or is it maturing enough?
Yeah, for sure. So it's kind of exploded in interest over the last couple of years, right? Agentic AI, it's become a bit of a buzzword. If you look, we put out a chart not too long ago of the number of mentions of agentic AI on earnings calls for companies like Microsoft or Salesforce or UiPath. And 200, 300% increase quarter on quarter as suddenly everybody started talking about this. Agentic AI kind of evolves the chatbots that we've gotten used to one step further by enabling them to actually start doing real work on our behalf. And we're seeing this enabled by the increased tool use of these models as well, right? I think this is one of the things that has differentiated a lot of OpenAI models, right? If you look at the use cases for O3 versus Grok, for example, OpenAI has done a really good job of building a set of tools around their models that allow them to actually take action on the behalf of the user. In terms of how this sort of changes the way that we work and think about the use of AI, it kind of goes back to something I was hinting at a minute ago, where we're going to become more orchestrators of AI, that we're setting out to perform tasks on our behalf, rather than necessarily spending that time ourselves on all of those individual tasks. In terms of how this overlaps with crypto, I think, at least in my space, there are two main things that I've seen so far. The first is sort of an identity verification part of the problem. So if you have an agent out there doing tasks on your behalf, how can you actually confirm who it's coming from, what they are and aren't authorized to do? And blockchain technology seems to be a key part of enabling actually tracking the origin and identity of these different agents. And another key way that we've seen it show up so far is sort of on the transaction layer. We say Bitcoin is the payment layer of the internet that was initially left out. And having the ability of an agent to actually go perform transactions on your behalf, not just in a consumer environment, right? But you can think of agents even buying the own compute that they themselves are using. That's something that could potentially be enabled by crypto as well. But Lorenzo, I'm curious how you've seen some of those show up.
Yeah, agree. I mean, I think we've had, since ChatGPT came out, and I think more in the last year, a lot of experimentation on crypto rails. And I think for now, we've seen basically a lot of teams trying to produce SDK, some type of frameworks to be able to plug LLMs to Twitter accounts and wallets basically, and to have agents. And we've seen a lot of experimentation with that. I would say like it's definitely not production ready right now. I think it's very, very interesting. I think crypto is, a fertile ground for capital formation, and so I think with these LLMs, how can they be productive? Can they go out there and actually do useful tasks? And I think like blockchains are perfect for that. For now, we haven't seen, some of these agents do very complex, long-term tasks. Like they're more like assistants. I think that is going to evolve. We probably need like more security also, in terms of these models, to be able to, we've seen a lot of experimentations, people giving them 10K or 100K and say, okay, go figure out something arbitrage or like investments and see if you can be productive. We have had, people trying to jailbreak these LLMs, right? Trying to trick them into giving you the money. And that has that has worked. And so I would say like we're definitely not there in terms of guardrails and production, in terms of use cases. I think that is going to evolve, and we're going to continue to see a lot of interesting things. I think we have more crypto AI questions, so yeah, happy to talk more about it.
Yeah, shifting into more crypto-specific questions, let's talk about crypto infrastructure a little bit, specifically on-chain, DeFi, all things related to the native infrastructure of it all, as opposed to the traditional vectors we see today with the ETF infrastructure and all that. What are your thoughts on the state of native infrastructure for crypto? Again, is it mature? Not enough? What do you think?
Yeah, I mean, in the last year, especially now with Circle did their IPO last week. I think tokenization, real world assets are, the hot topic right now. And we've had like a lot of institutions come to us. They're obviously interacting with crypto and digital assets in a way that they weren't a year ago. And I think infrastructure is definitely ready and more kind of production grade, I would say. Even like in terms of the layer ones, like a lot of these institutions, they either want to deploy products or blockchains, or layer twos, or like on Ethereum, on Solana. I think like a year and a half, 2 years ago, they were very unreliable in terms of performance. The costs were pretty high. So if you think like an institution, really what they need to know when they start a project like that, it's how reliable is it like in the next kind of 3 to 5 years. They're investing a lot of money deploying infrastructure, and I think it was definitely not ready 2 years ago. I think now you basically have sub-cent or even hundreds of cent transactions, which I think for retail use cases and institution trying to onboard people onto products, that is definitely what you need both on Ethereum and Solana. So yeah, I think also in terms of usability, on the custody side, I think it's still a bit clunky for institutions. They rely a lot on third-party kind of custodians. If you look at most of the big institutions with crypto, on the UX UI, I think there's a lot of work that needs to be done still. But from the conversations that we've had, and obviously especially with stable coins and trying to bring more off-chain assets on blockchains, it's definitely more production grade ready, I would say right now. And I think institutions are really they're really trying to deploy a lot of products. Even behemoths like Visa, MasterCard, like we talked to them, and they're definitely developing a lot of pilots projects. And so yeah, I would say like it has changed drastically in the last year.
Gotcha. Going back to the topic of convergence a little bit. We touched on agentic AI as a convergence point between crypto and AI. Do any of you see any other convergences between the two technologies?
Don't know.
Well, I mean, I'm going to kick it back to you shortly here because I'm curious about sort of the other thing that came to mind for me was the identification kind of layer, right? So I'm curious if we're seeing any potential use of crypto sort of in that convergence of the two of, if you have, whether it's a person or an AI agent, verifying them and their output, right? Have we seen early use cases for that yet? Or
Yeah, there's two things. So I would say like the biggest project working on that is definitely WorldCoin, right? I think many of you know they're basically scanning people's eyeballs to be able to recognize humans in a more decentralized and trustless way, I would say. So I would say that definitely the main player. We haven't seen yet production use cases, I would say. There's another cohort in terms that is working on distributed models, so pre-training and inference. I think to my knowledge, like there's two big teams, News Research and Prime Intellect. They're trying to build decentralized models. They're fairly small. I think it's 20 billion parameters, 32 billion, so it's like very small compared to the traditional hyperscalers. I think that is very interesting. I'm skeptical in terms of the performance. Like it's probably not going to be the same use cases, right? I think a lot of people forget that OpenAI, Meta, they're just shipping products at a pace that is just they have a lot of resources. They have a product skill set, I would say, that is hard to rival with in terms of use cases, right? Like you have the models, but you actually need like very good products in terms of UX UI, and so we'll see. I think it's very interesting because they're basically open sourcing data, the weights of the model, which is usually closed source for a lot of the hyperscalers. We'll see the use cases. Obviously, this is not with this is with commercial hardware, not with the latest NVIDIA chips. So again, I think it's very early on with the crypto and AI, like on pre-training and inference. I think there will be interesting use cases, but very very early on, I would say.
I'm glad you mentioned decentralized compute as well, because that's one of the interesting things we've seen a couple of papers come out on lately is the potential for even some of the larger companies that you're talking about that have very large networks of connected devices. So I'm thinking Tesla with its fleet of automobiles, or companies like Meta or Apple who have large scale consumer products as well. A lot of them now potentially could inference, or in some cases maybe even train across large distributed networks of their individual products as well, especially if there's a lot of compute on the actual device itself. So it'll be interesting to see if that becomes one of the use cases, not for some of the smaller players, but even for some of the hyperscale level players that we're seeing.
Touching on the decentralized compute topic, we see a new emerging trend of treating data and information as, let's say, a profitable business model, just valuing that itself. Is there any further convergence between AI and crypto in that regard? How do you see that interacting in terms of applying valuations directly to the data and using that for a business model?
Yeah, it'll be interesting to see. I haven't thought a ton about how crypto specifically will play into sort of the valuation of data. But we are definitely seeing it become increasingly important, right? We're seeing it become a meaningful business line for companies like Reddit, who are selling their data to these large language model companies. In fact, there was a lawsuit announced, I think, just last week between Reddit and Anthropic, because Anthropic was, scraping this data from Reddit instead of actually paying for it. So we're seeing sort of deals worked out now between a lot of these platforms that have trillions of tokens of data potentially on their platform, and then trying to leverage that into a revenue item. Or in some cases, it can be a differentiator. In the case of XAI, they have access to all of the data on X, formerly Twitter, which they've been leveraging as a training set as well. So there's definitely now a monetary value to those data sets. I think it'll be interesting to see how people track them. I think it's becoming increasingly important to some publishers of data to know how their data specifically is being used by the model. And I could see crypto coming in that front, right? Of if you have a specific piece of data and you want to track sort of the life cycle of how that's being used by a model, that's somewhere where you could potentially use crypto instead of more traditional methods. Could probably save some costs on that front.
Gotcha. That's two questions. First one, it's kind of hopeful, and the other one is kind of boring, but let's finish on a boring note, let's say. 3 to 5 years into the future, is there anything AI or crypto related or a convergence of the two that we haven't talked about here? Anything niche that you're thinking of as it relates to the, let's say, midterm future? Any thoughts on that?
Yeah, I mean, I can kick things off. I think what I'm excited to see change over the next 3 to 5 years, and I've hinted at it a little bit, but the amount of tooling that could potentially be built out around AI agents, I think that's going to be sort of even more transformative than what we've seen in the first generation of large language models. So I think crypto will definitely be a part of that, especially on the transaction front. If we want AI to actually start interacting with other enterprises and organizations on our behalf, then I think that's where that comes in. But yeah, I'm excited to start seeing the distribution networks and tooling start to be built out around these models in more ways than what we're currently seeing. Right now, it's just kind of in the testing phase where a lot of large language model companies have built out sort of computer vision tools where you can, in a small scale, allow them to do work on your behalf locally. But we've yet to see that kind of scale up to an enterprise scale, even though we're starting to see it in places like Palantir, but it's still on a relatively small scale compared to what it could be.
So next 5 years, just crypto and AI, or in general? I mean, crypto and AI, I think in crypto, like over the last 10 years, I would say, since basically Ethereum came out, we've built a lot of tooling and primitives of cryptography, privacy, identity. I think obviously a lot of that can be used and leveraged with AI. I think obviously, agents, like in the future, like where are they going to transact? What type of network are they going to use? Blockchain is definitely, I would say, one of the preferred ones in my mind, right? Like, are they going to have to KYC to use like a credit card or a debit card? Like probably not, right? Like you can basically spin up a wallet in a few seconds, an account, they can transact on any of these blockchains permissionlessly. They have pretty much instant finality, right? Like this is all code and smart contracts, so that they can actually know if a transaction is executed or not, which is not the case in traditional finance, right? If you do a wire, you probably have to wait like 1 or 2 days if it's between different countries. You don't know if it went through. So just in terms of products and agents on chain, I think they're going to be very, very very interesting use cases. We haven't talked about prediction markets. I think that is very interesting, right? Like, is there Polymarket like is the biggest prediction market? I think it went pretty viral with the presidential race 6 to 8 months ago, and so with like a lot of these markets, they're really interesting. Even in terms, we were talking about data before in terms of weather, right? Like if you see some of the markets on Polymarket, and for example, the insurance price for fire, like in Los Angeles, right? Like, is there a misprice? there, right? Like in terms of how likely it is that there's going to be a fire, how much you're paying. I'm sure there's uh, a lot of pricing that can be improved from agents and new use cases that we're going to see. So yeah, I'm really excited about blockchain rails being leveraged by these AI agents. I think going off a bit like crypto and AI, I think tokenization in general and RWA. It's been basically 10 years since Ethereum came out, and most of the use cases that we have in crypto right now, they're very endogenous, basically. Like it's either transacting between two tokens or leveraging debt to go buy more tokens, basically. And so I think it's pretty clear we've hit a wall in terms of revenue, fees, and number of users. And again, I think now institutions are coming on chain. We've seen Apollo basically deploy 6 private credit funds with Securitize. We're thinking of tokenizing our interval venture fund, and I think there's a lot of new use cases that we actually wouldn't be able to do with the tradition, like with exchanges on Nasdaq or even like traditional rails. So I'm very excited about that, right? Like now I think we have about 150 billion of TVL, which is total value locked on blockchains. We have about 250 billion dollar stable coins. How can we 10x that? And I think you need off-chain revenues and products, like real life, real world assets, funds to come on chain. And I think that's something I'm really excited.
Awesome. Last and boring question. Let's talk about regulation. So in this new administration, there seems to be a big shift regarding both crypto and AI regulation, a much more favorable view on the industries. What are your thoughts in terms of how these two industries are being regulated today? Is it too much, too little? What's your stance on this?
Joseph, do you want to start?
Yeah, I think it's an interesting topic. I'm definitely glad that there's an increased tendency towards reduced regulation here, because I think one of the biggest risks for AI is over-regulating it early on. It's interesting to see every time one of these large language companies and large language model companies releases a new product, there's almost always kind of an asterisk at the end that this is not yet available in the EEA, UK, or Switzerland, right? It's almost a given that those are going to roll out 6 months later just because of the regulations there. So while I think it's important to have guardrails in place, we're already seeing certain regions be disadvantaged by maybe excessive regulation. I think it's important to be careful as well when we think about sort of global regulations. Another hot topic, and you didn't mention it in your question necessarily, but when we think about regulating chip exports, right, to China, there are some arguments that can be made for why that could work in the long term when you think about how aggressively you need to scale the amount of compute to deploy models broadly. But realistically, what we're seeing in the short term is this is just forcing companies in China to innovate, and to innovate very rapidly, both in terms of their own semiconductor design and their models as well. We've seen models from DeepSeek and Alibaba that have been very competitive with US companies, especially when you factor in how much the cost of those models to run is being subsidized right now. So yeah, I think long term, we're strong believers that less regulation in this space will be helpful to not only the individual AI companies, but thinking about it in sort of a geopolitical sense, will probably benefit our own ability to innovate in the long run as well.
I mean, for crypto, I think we're having a lot of what we wish for, like in the last month. I mean, we're having the Genius Act for stablecoins, which is going to be, which is very good news. I mean, Circle did their IPO last week. So it basically gives, a clear clear guidelines for the biggest stablecoin providers in terms of on-off ramp, reserves, collateral. So I think that is really going to boost stablecoins and tokenization in general. And I think like pretty much everybody in the industry is happy with the bill. I think the next big one is the market structure one, which would basically regulate I think tokens in general. And so are they secure? Is there a test for whether they're securities or commodities at this point? Like Bitcoin, Ethereum, and probably Solana are deemed crypto commodities, and so we need clear guidance on the rest of the tokens, especially for teams. Are they able to distribute revenue to token holders? Are there securities? Is there in terms of stakeholder concentrations, there a limit they need to obey? And so I think that's probably the biggest piece of regulation that is going to come hopefully at the second half of this year. I'm quite hopeful, but I think already with the Genius Act, I mean, there's a lot of tailwinds. So yeah.
Perfect. With that, we open the floor for 2 questions because we're short on time, I think. So, any questions?
Yeah, let just keep the question short and not one question in 27 parts, and no asking for money.
Yeah.
All right, I'll try to follow Ken's guidelines. When you're talking consumer crypto, I think so far the only like decent semblance of product market fit we've seen is gambling and international payments. What do you think is the most promising? I know if AI is helping solve like the user experience problem, and maybe there's some potential there. Web3 gaming seems to be calling flat, but there's maybe potential. I'd like to hear for you, like, what do you see from a consumer standpoint, the breakout apps that are going to be coming around tokenization, NFTs, and whatnot?
Yeah, it's a good question. I think definitely like it's going more B2B and less consumer. And probably that's going to be the biggest use case going forward. And I think that's okay, to be completely honest. I think the overhead of just, having to run like a front end in the decentralized manner and, decentralized nodes, like it's very redundant, and the user experience is really subpar compared to traditional kind of Web2 experiences, right? I think Polymarket is interesting. I think there's a lot of people that are working on gaming. I'm not a big gamer, so I haven't paid attention a lot to that space. I think in terms of monetization and probably ownership of underlying assets, like that is definitely interesting. SocialFi, I mean, we've seen Farcaster and a couple of other projects. So I think there's a lot of verticals. I would say probably if you look at the amount of money that is going to come to the space and the biggest products in the next years, I think it's probably going to be more B2B and institutional and basically the backbone and infrastructure, and than consumer use cases. So yeah, I think it very few right now that are not trading, right? Like if you want to trade, I think those products are pretty good, like on Uniswap or perpetuals. If it's trading, leveraging, those type of use cases. But I think something similar to a real fintech or SaaS type of use case, that is, we don't have it yet, I would say.
Any other questions?
One more? Oh,
Yeah, we can do 2 more. I think I underestimated how much time we had.
yeah. No, we're good, but it's up to you.
Awesome. Is this on? Yes. So I'm sure you all followed some of the researcher departures from Meta a couple of weeks ago. Do you think we're starting to hit the asymptotal limit of where more parameters equals more performance in models?
Yeah, that's a good question. I think we've definitely reached the point where most of the progress is being made outside of just an expansion of parameters, right? I don't know that we've hit the asymptote yet where you can, in theory, make a larger model, but I think right now the chief limiting factors are going to be the quality and quantity of data and the tooling that you've built around it. So, yeah, I would say to answer your question, no, but in the short term, I would say most likely yes.
Any other questions? Let's go with you and then in the back.
So understanding that we don't want to overregulate, right? Because that does stifle innovation. How do we manage, or how do you guys see us managing the ethical use of data as it relates to AI while maintaining that open market?
Yeah, that's a good question. I think, at least in terms of how I think about it, so much of it has more to do with managing the actual end use case rather than trying to manage on the tech capabilities end of the spectrum, right? I would say that's the main fault that I've seen with a lot of the regulation that's tried to get at what you're talking about, is managing the actual capabilities of the models themselves, which is just a game that you can't possibly win, and eventually will stifle innovation as well. So I think as long as the regulations in question are more focused on the actual use cases and tying that back to the actors themselves, rather than trying to limit the technological capability, then I think it's possible to do that.
The back.
Going beyond 5 years, looking at cybersecurity specifically, how do you see the 8 new cryptographic algorithms that NIST is promoting going to impact us?
This is more of a crypto question.
Yeah.
Yeah. I can take that if you want. So just to lay the land, I think for a lot of it, you mean quantum computing coming online?
Yeah.
Which is a concern, a risk tale for crypto specifically. So there's 2 layers of cryptographic security. Let's talk Bitcoin for now. One is the signature scheme. We call it elliptic curve cryptography, public key cryptography, or ECDSA. And the other one is the proof of work security of the network, what miners do, basically. The most concerning one would be the first one, the elliptic curve. And the reason for this is because there's a big part of the supply, about 20 to 25% of the supply, which is only protected, cryptographically speaking, by this layer of security. Part of the reason you may have heard that you never reuse a Bitcoin address is because of this reason. Satoshi, unfortunately, Satoshi Nakamoto, the founder of Bitcoin, left his share of the supply, 1.1 million or so, only guarded by the proof of work layer and not the ECDSA layer. This is quantum vulnerable for sure. However, there's certain optimizations into how to solve the problem. One is forking the network, could be a soft or hard fork of it, so that it becomes quantum resistant with some trade-offs in between. And also game theoretically, I think it's very important to, there's going to be first of all, the ETFs are going to be guarded by all of this because they're going to follow most likely by law in the short term, the security mechanisms to guard against any quantum attacks. Beyond the cryptographic aspects, which you can solve in a relatively short term, let's say within the 5 to 10 years. There's also the game theoretical aspect, which is, zero-day theory would indicate that there are other attack vectors that are more vulnerable than Bitcoin. If you have a quantum attacker, odds are most likely would be out of the US or China. So any nation state holding a bag of Bitcoin decreases the risk of a quantum attack, especially if both parties hold it. The other scenario would be a Goldfinger attack. That's the official name of it. It's Goldfinger because of James Bond, and it's literally like a villain, the Joker in the Batman movie, trying to just burn the world, right? for no reason. That scenario is very unlikely in the terms that I don't expect a quantum attacker to be a Joker type of archetype. I would say it would likely come from IBM, Microsoft, Google, or a nation state or a coalition of those two factions. In that regard, I think the game theory works in the favor of Bitcoin in terms of if you're holding a bag of it, there's less incentive to destroy it. And we see that widespread adoption, especially in the US, but also increasing hints of it in Russia and China. We know Iran has also mined Bitcoin and so on and so forth. So the game theoretic attack vector is diversified in that way. Regardless, the technical part, which is the cryptographic component, can be fixed with several trade-offs. And I know for a fact that Bitcoin devs are actively talking about this today.
I I mean on quantum, I'm definitely not the expert, and I think it's hard to judge. I think it depends on who you talk. People say it's 30, we'll still have like 20, 30 years, and you talk to another expert and it says 5 years or 10 years. So definitely hard. I mean, I think on the crypto side, we've had, especially with Bitcoin in the last 15 years, a lot of theoretical mind games to figure out what would happen, if you're able to attack the network and basically get a hold of a large portion of Bitcoin, or even a quantum attack. I think practically it's very hard to imagine how that would work. Like, even if you get a hold of most of the supply or a large portion, all the exchange would block you, so you wouldn't be able to kind of off ramp those Bitcoin or to crystallize the gain. Probably most of the miners would not accept your Bitcoin in the block, so you would also. It's just very, very hard. The price would tank also because people would lose confidence. So unless you're hedging that on some other, I think in terms of practicality, risk, it's very unlikely. But I think, as David said, like, there's a lot of people thinking about that and kind of quantum proof signatures or post quantum world. But I think it's also a problem in just like in general, like all the bank, basically the whole internet, right, is built with those signing schemes. So I think relatively, I think crypto is very niche and small if you compare it to that.
Yeah, and on top of that, I would say that I think people underestimate the economic or the incentive game theoretical implications or the security mechanisms under which Bitcoin was designed to protect against something like this becomes something of a easier said than done type of scenario. Again, like, what do you do with Satoshi's Bitcoin if pretty much no exchange would off-ramp it? You would get arrested in any nation if you transact with it, and so on and so forth. But on top of that, we can have even like recourse where, I mean, I've talked about some scenarios that Bitcoin developers could do. Let's say you have that 20% of supply. You can pretty much by commit say, I'm going to run a clock for 5 years. If the Bitcoin doesn't move to quantum resistant address after 5 years, we fork you out of the network. And therefore like secure the protected participants of it. That's one scenario out of dozens. So yeah, but quantum is a top, and also like I would be highly skeptical about a lot of the quantum apparent quantum innovations. I think personally that the Microsoft Majorana one, the new quantum chip they promoted a few months ago, I'm highly skeptical of it. Looking through the physics of it, like the claims were like pretty overstated into, they were claiming a fifth state of matter into Majorana particles. And in my personal experience, there's very few people who have talked in the quantum world that I haven't gotten a sense of, instead of having a normal investing conversation, they just start talking about Hilbert spaces and and deep quantum theory terminology to obfuscate a lot of what they want to communicate. And then they are telling you, oh, but our use case is just, timekeeping or something like that. So very niche, small sector of the industry. So I would be skeptical in general, of course, about a lot of the claims even by the big companies regarding quantum. I would like, if there's a big quantum innovation, I would expect it more to be classified in a coalition between one of the big companies and the U.S. military. So you wouldn't know about it, I would say. So yeah, anything you guys want to add? We're good. Any more questions? Perfect. Thank you so much.
Thank you so much. David, Lorenzo, and Joseph, thank you very much for your insights and for your ongoing support of the program.
I want to and thank our corporate champions again, ARK Invest and Duke Energy, as well as our program sponsors, and for the ESOs that came out to support us today. Thank you very much. If anybody has not been upstairs and needs a tour of the upstairs, feel free to head up to the third floor and walk around.